Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Orbital Energy Group. I will go over a summary of the company, its subsidiaries, its products offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation. So let's get right into it. Orbital Energy Group is a publicly traded company dedicated to maximizing shareholder profit for us through the acquisition and development of innovative companies to create a diversified energy infrastructure services platform. So think of this company as a holding company that purchases what they believe are strategic companies in the energy field that they're focused on. First, I would like to do a deep dive into the company's core businesses, because to understand the forward projection of this company, the underlying foundation is extremely important to understand first. So Orbital Energy Group of companies consists of Orbital Gas Systems Incorporated, Orbital Power Services, Orbital Renewables, Orbital Solar Services, and the Eclipse Foundation Group, a subsidiary of Orbital Foundation Services. So let's examine each of one of these companies. So Orbital Gas Systems Incorporated is a 30-year leader in the innovative gas solutions, serving the energy, power, and processing markets through the design, installation, and commissioning of industrial gas sampling, measurement, and delivery services. So, but first, let's examine what Joe Biden is going to be doing over the next couple years with natural gas. With Joe Biden wanting to end natural gas use within 15 years, that might have an effect on Orbital Gas Systems in the future in the United States market, but that's years from now. So I'm not really too worried about that at the present moment. But Orbital Gas Systems has a global footprint, and it's not going to be like right away that it would have a direct effect. All right, let's get into the second subsidiary of Orbital. Orbital Power Services provides engineering, construction, maintenance, and energy emergency response solutions to the power, utilities, and midstream markets. I think this is a sustainable business in the years to come for the OEG group, which is a good thing. Its next is Orbital Renewables, and it provides project consultancy and execution services to create waste to grid solutions that are cost effective while maximizing environmental benefit. I think this one has some future challenges that face Orbital Gas Systems, because they're dealing with natural gas as well, but they're not just dealing with natural gas, so that's just one subset of Orbital Renewables, but that might have an effect, let's say 15 years down the road, but it's not anything I'm really too worried about right here. All right, the next company that they own is Orbital Solar Services. It provides engineering, procurement, and construction, which we consider EPC, expertise in the renewable energy industry, and established relationships with solar developers and panel manufacturers in the utility scale solar market. They are a leader in delivering quality construction and project management services. They serve a wide variety of project types, including the commercial space, substations, solar farms, and public utility grills projects. I think this subsidiary for Orbital Group will be extremely profitable in the years to come of all their subsidiaries. So this is a good one that they own. And the last one is the Eclipse Foundation Group. It's a subsidiary of Orbital Foundation Services. What they offer is a turnkey deep foundation construction provider, offering a full line of foundation design solutions with the proper method of installation. Also think that this subsidiary has a lot of growth potential in the next few years and beyond. So if I can sum up all these businesses by saying they are basically the contractors that make projects happen. Yes, I know that's a generalization, but let's just try to keep everything as simple as possible in this analysis. So let's go ahead and look at some of the news and fundamentals of the OEG group. So Orbital Energy Group almost lost its status on NASDAQ last month, at the beginning of the last month, in December 9th, because it was trading below $1 a share. But here in this news article, it said they were able to regain compliance with the NASDAQ listing rule, and the matter is now closed. So NASDAQ almost kicked them off of their platform. And 3 days ago, this is the biggest news to date. that the company announced it entered into a securities purchase agreement with institutional investors for the purchase and sale of 10 million shares of its common stock at a purchase price of $3.50 a share in a registered direct offering priced at the market under NASDAQ rules. That closing date was on January 15th, which was yesterday. Now, I looked up the financials, the SEC reports on that, and they plan to use the funds for the net proceeds for working capital and general corporate purposes. Let's first start to look at the revenue of OEG over the past few years. They've definitely seen a wild ride with their revenue stream. Back in 2012, is at 41 million. It increased to 86 million, and all of a sudden it tanked in 2017, 18, and 19 to $23 million per year. Now, revenue is projected to grow about 64.4% per year annually, and I agree with that because of the favorable Joe Biden administration for renewables going forward. I project that the revenues will grow faster than the U.S. market by about 10.2% per year. Now, the past losses have increased over the past 5 years at a rate of around 28.8% per year. Now, OEG will report 2020 earnings on March 2nd, 2020, and it had negative earnings per share for years and is not projected to be profitable for at least 3 years from now. So that's the projection. Unfavorable, 3 years, not profitable. That's kind of important to note. Now, OEG is overvalued on its price to book ratio of 4.9 times compared to the U.S. construction industry average of 2.6 times. Now, the return on assets is negative 32%, and the industry average right now is 5.7% positive. OEG's debt to income ratio is 48%, which is considerably high. OEG's debt to equity ratio has increased from 15.5% to 48% over the past 5 years. OEG has sufficient cash flow runway for the next 3 months. It's based upon the latest reported cash flow and has since raised additional capital, as I discussed earlier. Now, the ownership breakdown of the company: institutions own about 18%, hedge funds 12%, individual insiders 11.5%, general public 57%, and the public company is around 0.6%. Now, shareholders have been diluted in the past year, with total shares outstanding growing about 5.9%. And so the analyst recommendations on this one. So one analyst has it a hold with a price target of $4. Other analysts have it an average price of $3 and say it's overweight. So there's a little bit of varying opinions right here. As you can see with the stock price, for the longest time, it was trading underneath $1. Right here, almost like 50 cents, 60 cents, 54 cents, and then recently it just had that huge increase from November. And I would say check this out, the election and then onward. So I think this got the Joe Biden bump, and that's what I feel happened right here. So, but before I give my buy, hold, or sell recommendation, I want to say that these companies, while being innovative at the core of what they do ride the wave of contracts for their services in this market. They will scale up and down with market and political conditions. I think outside political factors are driving the share price of this one up without looking overall at the fundamentals of the company. I do think there's a bright future for Orbital Energy Group in the years to come with Biden administration's push towards renewables. But unfortunately, right now, I am a sell on Orbital Energy Group at the current price of $4. I feel that it is overvalued. I put a fair value price right now currently at around $2.15 a share. Now, this stock is not for the faint of heart. It will have extreme amounts of volatility, with being more volatile than 90% of U.S. stocks over the past 3 months, moving around 33% a week. Now, this company is currently unprofitable and has been for 8 years now, and is not forecasted to be profitable over the next 3 years. If you were to buy this at about $2.15 a share and hold it for the long term, I think over the next few years there might be great potential for the company. But there is absolutely no way that I can recommend this stock at the current price of $4. So in summary, I love this company, and its potential over the next few years is huge. And I will keep this one on my watch list for in the future. So there you have it, folks. That is my recommendation on OEG. If you like this video, smash that like button down below and consider subscribing if you like to hear financial news that can benefit you. I'll be talking with you in the next stock update. Ciao.